Nguyen, Denis Yamlensky, and Mirsad Layuti. The European Technology Chamber is committed to the help of European companies to increase their competitiveness and as well to reach the SDGs around the globe, but also to access opportunities for the European tech companies in emerging markets. The Finance Alliance is supporting this overall strategy of the Chamber and focuses on the objective of enable these European companies to become more competitive and especially to strengthen those in terms of finance and access to capital. The Finance Alliance wants to strengthen European innovation capabilities by helping startups and SMEs to reach the capital markets and helping companies to prosper and grow with their technology. We also promote the smart impact investment for the greater good of mankind, made through strategic pilot projects. This is how we actually achieve together with Master Seed Foundation with the Catholic Church. But first, I would like to hand over the microphone to Igor, our Energy Alliance Director, who will be introducing you to who we are as a chamber, which one is our mission, and of course, all the tools that we offer to our advocates. So thank you very much. I hope that you will have a very interesting digital talk and an informative event. So thank you.
Dear friends and colleagues, good morning. My first question, if you can see my screen now.
You are now unmuted. We can see Igor, but maybe you can do full screen.
Okay. Okay, dear friends. First of all, let me welcome you on behalf of European Technology Chamber. For those who are participating in our events for the first time, I would briefly underline that UTEF was created within the framework of the European Union under the SDG programs and organizes its work on the exchange of information, promotion, and commercialization of advanced technologies with the involvement of leading experts in various sectors of the economy. In our case today, with special attention on of finance sector, not energy, but finance sector. And you see the UTEC Chamber is a registered non-profit organization, and our leading light, our main goal, and our very, very important words are technology obliges, and our three main directions we are going: competitiveness, growth, sustainability. It's for us, for our members, K ways we are going. So we have very many tools, digital tools, and not only digital. We have, for example, every year 650 section meetings. We have very, very wide and rich opportunities to do publications. You can see it here. Yes, we have a very, very modern, our own digital platform. It's a unique digital platform where many events are holding, not only webinars, but also expos and awards to many topics. And it's a very, very important tool in the modern world. Our chamber is organized. You have a look here. This slide, we have regional alliances like China or Africa Alliance, impact alliances like finance, and tech alliances like Energy Alliance, where I am director. And this organization, this structure, this structure lets us to organize these connections, these matching, this networking in a very, very efficient way. So please have a look at our upcoming summits, expos, and awards. But all these informations you can find in all social media. We are present. Please join us LinkedIn, Twitter, all the social media. We are with you. So here are some samples of events. Yes, virtual events, and we have you. Please pay attention. We have 500,000 registrants a year. Yes, we have about 700 keynote speakers a year. So experts in all economic sectors. But I would underline the end of my short introduction that our main thing is commercialization. We are waiting for you. We are waiting for new members, and commercialization and business opportunities that we are you is the main thing for us. Thank you very much for your attention, and I wish you now a very interesting webinar. Thank you.
Thank you very much, Igor, for introducing the UTech Chamber, and thank you very much also, Maria, for your welcome note. My name is Michaela Maya. I'm the director of the Finance Alliance, and I will be moderating today's event. Today's webinar is about metaverse challenges and opportunities for financial services. Last year marked a turning point in human history. Significant developments have been witnessed in all aspects of our lives, and its effects still continue to generate new transformation areas around the globe. One of the biggest and most remarkable of these developments is happening in the digital transformation landscape, metaverse. The metaverse is expected to become an important digital platform for both personal and business interaction, including finance. In fact, it is believed that financial data management and the methods of managing financial transactions provided with fintech solutions will be equal to real life and will be most important indicator of making the metaverse as indispensable as real life. And in today's webinar, we are going to discuss the challenges of opportunities of financial services. So our first speaker today is Surabhi Gande. And after her presentation, we will have our panel discussion. So Surabhi is a member of Women's Indian Chamber of Commerce and Industry. This is an Emerging Technologies Council and a startup, and she's working as a startup mentor at Stanford Lead Incubation Accelerator. Currently, she's working on areas such as a digital asset roadmap, metaverse, etc., with Capgemini. She has been advising CXOs at banking and financial institutions for over a decade in their tech strategy and business strategy, from customer experience to setting up payment banks to post-merger integration. She has advised companies on emerging tech trends and market assessment for technologies such as blockchain, AI, banking as a service. She has been an ex-banker with product strategy and management across retail, wealth, government, non-residents. Surabhi started her career as a CRM developer for multi-country rollout for banking and pharma. She's a computer engineer and MBA by education. Surabhi, welcome. The floor is yours. I will give you the moderator rights, and you will be able to share your screen.
Thank you, Michael.
You have the right.
For that amazing introduction. I'll just try to share, but let me know once the screen is visible. So
we can see.
So while we're talking about metaverse for financial services, the main question is, what is the metaverse? And it really depends on who you ask. If you're asking bankers who have, in last few decades, turned from their books and pages to digitizing various processes across systems, they may not be that interested unless they understand the value. If you ask a gamer or the creator economy, they would talk about how they can monetize their their playlists, their songs, their art. They can create interactive NFTs, and we have seen a full year of NFTs last year. So what exactly is the metaverse? Is it's important to understand from a business perspective and how you can interact with your customers in this new technology. Is it a fad? Is it here to stay? I think it is important to understand what exactly it is. So it is ideally a mixture of two. It is gaming, NFT, blockchain, crypto. On one side, these are the technologies, the various things that you can do. Have it in decentralized nature, not have it in a centralized manner. Probably have your, now what are NFTs? It is, like a serial number and the ownership attached to it. Now this is verified data. That's essentially what an NFT is. It's verified data. That's exactly what bankers look for when they are auditing, when they look for data, right? It's not just an overpriced JPEG. It's not something that is only in the virtual land. There are various business applications of these, new technological things that we have on the blockchain. On the other side, we have VR, AR, smart glasses. You have Google that is coming up with glasses. Qualcomm is coming up with glasses that look like your glasses. Now, is it only for Gen Zs? Is it only for millennials? Is it only for people who are interested in this? Perhaps it is. It will even help your old parents who are, probably in their own countries, own homes, and fight loneliness. Probably speak better in immersive experiences with their friends, childhood, uh, colleagues, or their old relatives. So the way we think about metaverse needs to go beyond gaming. It is very dangerously linked only to gaming. But there are various possibilities where bankers can think of how they can retain their primacy with customers in this new era. I mean, banks have been consistently been struggling with the competition, right? Let's say fintech. You have embedded finance, right? They start off with payments and they slowly take up more space of the value chain, whether it is lending, whether it is assets, whether it is trading. And now you have all these neobanks, challenger banks, that have a completely new structural uh, change. So whereas where fintechs talk about, they have disrupted the UI, the experience. Blockchain is going to disrupt it structurally. Your logics and rules, when you apply for a loan, it moves from one system to another, and the processes that are built move across applications. With blockchain and smart contracts, it is just going to be embedded. There isn't going to be a trigger system separately. So this is going to be a structural change in how you interact, not only with your clients, your workforce. How are they going to respond to this sort of change, and why should you change? Is the question. Let's say some people would say, uh, I don't like VR glasses, they are clunky. I don't want to be in the metaverse. Who do I show? My friends are not in the metaverse. So it's important to understand what exactly is metaverse. It's your community, your social status. If your NFT is it's in the virtual land, who do you show it to? But what if your NFT or your wine collection gets you a discount on a banking product that you already have? Because it is assigned a value. We are in the token economy where everything can be digitized. Your assets have a certain value. Apart from your cash, your savings deposits, your bonds, or whatever your financial investments are, they're traditional ones. This is a new asset class in addition to what you have. What if you could rent your second property which you barely visit regularly, and if you put it on rent without having to bother about checking who the person is, and because it's already verified on a blockchain. There are already startups doing all of these things. Second is game. When I say gameplay is the essence, it doesn't mean you have to play a game. It essentially means gamification, or what is a fun aspect, right? What is the new experience? People do not get up in the morning saying, I want to go to the bank to check my account or to check my investment account. Of course, the traders would do that, but essentially you are looking for new experiences, interestingness. What did you do on the weekend is the most common question on Monday. So having this fun element when you construct a metaverse is important, and it's important for banks to understand this decentralized form. Like you have games like Fortnite and all of these, Pokemon Go and all. They are not decentralized. They just, there are games which are not really the metaverse. They are just games where you have a lot of people playing. But when you combine all of these technologies, which are immersive experiences, blockchain, and most importantly, the context, why would someone be interested in participating? Is it for the sake of doing it? Or can you offer something that is useful for a person, which is relevant to a person? What is it that they look for? Are they looking for savings? Are they looking for investments? But everyone is definitely looking for fun, connectedness, and social life. An interesting number to note is 51% of retail banking customers say fun and rewards are the top two missing things in banking. This is something bankers should pay attention to, because banks have not really changed their fees or their products so much so since decades. They've moved from papers to online. They have digitized. You don't have to go get a stamp or a signature. You do not have to visit a branch unless it's a big issue that can't be solved online. But what really is missing in that experience, when you say fun and rewards, that's essentially what Metaverse and Web3 provides. Incentivizing models, ability to exchange and interact with global communities. I think this is an opportunity that banks and financial services should look at. New products and services, service models. When you talk of NFT, as I explained earlier, it is not just an overpriced image. How can you better understand your customers? How can you create an NFT for loyalty for 10 years and give them appropriate discounts in their fixed deposit? Because they have other hobbies, they are different personalities. This is, by the way, my avatar on Ready Player Me. I've not created an NFT of it. I may change it after a few weeks. I could have different avatars. How do you cater to this sort of customer? You have an aging population all over the world, especially Europe, blue zones in Japan. How do you cater to these customers in their daily convenience, in their pension funds, using these new technologies? I think these new marketplaces that will enable you to monetize data and assets in various ways is essentially the value of metaverse. And finally, digital twins is how do you create an exact digital twin of a house? How do you do the risk assessment? How do you do insurance? Let's say when we talk about insurance, assume your company's 50% employees start working in the metaverse. The way you have insurance today for your employees, how do you extend that insurance to their avatars? Now, why does an avatar need insurance? There are bad actors everywhere. You have people in real life, you will have people in hacking and security challenges. When we talk about challenges of the metaverse, there are security and risk issues. There are fake JPEGs, fake NFTs. People are, you see news all the time about various brands and so many millions of dollars being lost, hacked, stuck. I mean, these technologies are still evolving. We are using wallets. In future, maybe we wouldn't use wallets. It will be easier. The UI will be simpler. We wouldn't have to write our recovery phrases on paper. The infrastructure is still Web 2. It will evolve to Web 3 when you have Microsoft, NVIDIA, all of these various companies start building Web 3 infrastructure, or you completely have decentralized protocols. Right? So it will be a hybrid in future, centralized and DeFi. Various global banks have been experimenting either by setting up shop in the metaverse or by creating metaverse funds to invest in, or engaging with their customers only in VR and AR, not in metaverse, but trying to experiment whether they can make business and new revenue models in these areas. Another challenges are bugs and volatility. If your blockchain or the smart contract is not designed well, it is going to be hacked. It is same as any code, and it is susceptible to some sort of volatility because it's a new asset class of cryptos and tokens. We have seen a recent crash of stable coins. Does it stop stable coins? No. Perhaps there'll be better regulations. Maybe not blanket regulations, but as European Commission has suggested in its financial stability report, it could be for the team that is implementing that project, that on that protocol. How do you maintain the innovation and decentralized and openness of metaverse and yet protect your customers? I think these are evolving. Germany is one of the most advanced countries, for example, when it comes to cryptos or tokenization of assets. Finally, bad design is your worst nightmare. If you do not design your metaverse well, if it is just virtual people floating around doing nothing, it will lose value. It will be like a one-time project. So I would like to conclude saying that you should not end up on the wall of shame, but truly understand how this new engagement model can help you. Maybe you're a runner and you love your shoes. You don't have to be in the metaverse, but your NFT tokens are going to help you maintain that shoe for a longer time, probably give you better insights on how you're running. And that is going to be interesting when you find someone else in some another country running in similar manner, and you connect with that person. And there are these micro communities and cultures that are forming all around the world. What is the benefit for financial services? To understand these new business models, to understand how people are changing their interactions because they've got used to being online for over 2 years in a pandemic. Thank you.
Thank you very much, Surabhi, for your very interesting and informative presentation. And I'm really looking forward to our panel discussion. Before I will continue introducing our other panelists, I would like to remind you that you are now able to submit your questions through our chat function, and we'll try to answer all of your questions during our Q&A session a little bit later. So now I would like to introduce you our next panelist, Mirsad. Mirsad Lahoti, born and raised in Tehran, Iran, moved to Dubai at a young age of 16, experiencing the world of high-end branding, marketing, and promotion. He moved to Austria at the age of 22 to experience and study architecture in EU at Technical University of Vienna. However, he was very passionate about technology as well as architecture. Middle of his study, he started a single-man agency, Daimotions, servicing small businesses, and turned it to 7 people full-time, helping small, medium-sized companies to stay efficient and to be aware of technical opportunities and challenges ahead. During his study, he managed to work with a high-end international luxury brand. Kitten helped them to build a professional email marketing campaigns and building them internal CRM for them. Kitten referred Daimotions to one of their magazine partners, which were the 3rd biggest publishing company in Vienna. Daimotion helped them to build an app for high-end and hotels like Park Hyatt and Ritz-Carlton Vienna. Mirsad decided to get involved in startups worlds because he was fascinated by technology and how tech can solve big problems. He tried and learned from different startups. In 2018, his team won a hackathon organized by US Embassy in Vienna. Pre-COVID, he and his friend Michael started to build an automating live streaming device that helped clubs to automate their live streaming and centralized all the live music on one platform so music lovers could listen to music club live. COVID pandemic challenged the idea that's when Mirsad got familiar with the concept of pandemic-proof businesses. Mirsad, together with Michael, again decided to build another platform to solve the problems the experienced artists were facing in this music industry, and Now he created his new project and company, Merced. Welcome. Can you hear me?
Absolutely. Thank
Would
you,
you like to say
Michaela.
a few words about you?
Sure, you said you covered everything, but thank you for having me here. You said most of it. I would just add on to the conversation we had. I'm CEO and co-founder of Soundverse. We are building a metaverse experience for music NFT collectors. We are creating a room that every music NFT owner can showcase their music NFTs within the room, which we call them Soundverses, and they can build their community and engage with people. But because we think getting to the real metaverse, it's a big challenge for normal users, and it's a big step to take. We are taking our Soundverses into 2D spaces that it's easier for users to understand, and then we expand it to the real metaverse. So as you said, I have experience with music industry, and that's how we started with the Soundverse. You heard about NFTs, you heard about the rumor that says middlemen are going away and it's going to be direct relationship between artists and the fans within the Web3 ecosystem. We are not agree with the statement. We think what Web3 and blockchain is doing is it's just making the transactions very transparent and the distribution automated. So this is going to save artists time, and it's going to shed transparency and clarity to the income flow, which is going to the pocket of the artist, and that's what we're solving within Soundverse. To give you more detail how we are trying to tackle this is first, let's go back to the NFT. Many people still have a hard time understanding what is NFT, what's the value, and we have seen like big NFTs have been trading for millions of dollars, if not thousands of dollars. For example, the Bored Ape Club, which the cheapest one is for $100,000 if you want to buy it now. The question is why, and people have hard time understanding what are NFTs. To give you a very simple answer, NFTs are a piece of software that you can own, and NFTs can be multifunctional. It doesn't, at the layer base, they're collectibles that anyone can collect and anyone can relate to the NFT as a social status. But on the second and third layer, every function within the NFTs can be changed, and in fact, NFTs can be upgradable, which means since NFTs are unique, they act like a key to give you access to exclusive experiences. That exclusive experience can be staying in a 5-star hotel. So your NFT can act basically like a key to your room. That exclusive experience can be to give you access to an exclusive community of people who have the same value, so you can hang out with them and network with them. So that's where NFTs come to the play. NFTs make people, owning NFTs give people a status and give them access to these communities. And the way we see NFTs in the future is they're going to have the impact in 3 areas mainly. The biggest one, in my opinion, it's going to be entertainment and music industry along the way, which is cultural, at the same time something that human being has been always valuing. But the second area that is going to have big impact on is a luxury sector, because of the very unique experiences that you can get and give to your fans. For example, to illustrate how NFTs can be impactful within luxury sector. Back in 2021, a New York restaurant decided to launch their NFTs, which going to give access to every NFT owner so they can eat in this restaurant. The restaurant was not built yet, and some famous and known reputable people were backing the project up. So they sold 10,000 keys for whoever owns these keys or these NFTs could eat in this restaurant. And on the day they sold it, they raised around $8.6 million US. and they start to build a restaurant, and in the next 6 months the restaurant going to be live, and whoever owns these NFTs can access to that restaurant. So this is not a new concept, obviously. If you know, in Dubai, Michaela, you're there, you know, there are many restaurants acting like this. They're membership only. In Berlin, if you know Soho Club, they're membership only. So the way it works is that in the current Soho Club, you have to own a membership and someone has to refer you. But if that membership become an NFT, then not only I get access to Soho, but also I can trade that with someone else. And whenever someone trade this NFT in a free market, the Soho Club or the issuer of the NFT going to collect secondary royalties, which is amazing for businesses because it's a trustless and automated experience. The third area that NFT is going to have a big impact, that's my opinion, that I'm sharing with the community here, is that it's going to have a big impact in the government. Passport's going to be NFT in one day. The marriage certificate's going to be NFT in one day. And that's only depend on the government, how fast they want to adopt this technology, because once the government get to the NFTs and they can issue a passport as an NFT, and they can put conditions on a passport. For example, this NFT is not tradable, which is pretty easy to do with the smart contracts. Then you are fighting against the fake passports and all the fraud which is happening around fake passports. So that government definitely have a big role into the NFTs, in my opinion, from passport to collecting taxes. And this gonna not only improve our government, but also improve the efficiency in terms and efficiency and financials of the government. So the way I imagine it is government gonna start collecting tax as a royalty. So based on every transaction which happen into businesses, government's gonna collect very small percentage, 1% or less than 1% tax as a result of every trade. So this not only give government more financials in long term, but also it's gonna help businesses to operate faster and more efficient. So that's my take on NFTs and what we are doing within the music industry. I would like to take this further and happy to disclose how we are changing the minting of the NFT within the music industry. But since I'm not aware what type of audience, what's the knowledge of our audience is at the current stage, I don't want to get so technical here. So Michaela, thank you for the opportunity, and please, I welcome any questions or any thoughts on this conversation.
Thank you very much, Marceta, for sharing with us, let's say, your speech, your experience. And I think even during the panel discussion, it will be very interesting if you will tell us more about your project and, let's say, the music metaverse that you are creating for artists, let's say, some kind of financial services for them. Okay, so welcome. And I would like to introduce you our next speaker and panelist, Monica Nguyen. Monica, you can switch on your camera that we can see you as well. So Monica is a DeFi enthusiast and SeFi optimist with a growth mindset. She started her crypto career in 2018 as an OTC broker supporting the trading operations desk at Ames Markets, a crypto asset brokerage headquartered out of London, UK. Monica is the client relationship lead and the managing client relationships for the Ames Group, which also includes Ames Financial, who are innovative providers of financial services, looking to leverage new technologies to provide services to customers who have been underserved by current financial institutions. Monica, welcome. Happy to have you here. Would you like to add something and tell you maybe more about your projects and your experiences with metaverse and financial services? We cannot hear you, Monica. You're mute.
Thank you, Michaela. Thank you for the fantastic introduction. I'm really happy to be here. yeah, I've started off in the cryptocurrency scene back in 2018 as a crypto broker supporting a cryptocurrency, crypto asset brokerage, and running trading operations here. That's how I got into the industry. And before that, I didn't come from a financial or crypto or blockchain background. I was in client services for the past 22 years. And what I have found that when I first started, you know, cryptocurrency was a bit skeptical. A lot of people were skeptical of cryptocurrencies, and boy, you know, it's moved and evolved. In the last 4 years that I've been here, it's moved and evolved so fast and so quick. There's so many innovation in this industry. There's so many things to learn. You can't possibly learn it all, because by the time you do learn about, I don't know, ICOs or NFTs, the market's moved on to now the metaverse. So the metaverse, for anyone watching, is pretty much, you know, we're building an ecosystem. The metaverse, if you think about it, is an ecosystem of technology. So the technology that we're building out, software, hardware, APIs, to create a virtual world that we can all participate in, either socially, either as gamers, gamification, or using everyday, let's say in the context of this conversation, financial services, but in the virtual world. Now, you probably have access to corporate online banking. You think that's pretty much, you know, okay for now. But in this world where, you know, in the UK high street, banks are closing every day. Real brick and mortar banks are closing every day because not many people are going into these banks anymore. Everyone's doing online banking. But what does that mean? It means that it's not thinking, it totally removes one sector of society, which is the older generation at pensionable age, who don't know how to access the internet or online banking. What about people that don't have English as their first language? They might not be able to be literate enough to go onto online banking and have access to financial services. What about the younger generation? They are not at the age of 18 to open a bank account, or 16, but they are excluded from having financial services. How can we, as a society, improve accessibility for the underserved to access financial services through the metaverse? Could it be, as a solution, build Santander, HSBC, NatWest, all these retail banks, but online, in a virtual world where you can put on your VR goggles, access banking services, speak to a cashier, speak to a personal banker online? And what does that world look like? So I'll leave that with you to all think about as a thought in your head. But the projects I'm working on is pretty much the same. At AIMS Group, we are providing financial services to the underserved. The underserved in the corporate world are those that are, you know, have a hard time accessing financial services, corporate day-to-day banking, such as those that are in the high-risk sectors, i.e. gambling companies, cryptocurrency companies, because retail banks do not have the risk appetite for these types of businesses. And they are legitimate businesses running their businesses online with a large client database, and you know, carry out their operations as any normal business does. It's just that they are classed as too high risk, that the banks don't have the appetite to keep relationships for. So those are that is the main project. That is my main role, to access this underserved market, bridging the gap between everyday financial corporate banking services to their everyday operational needs. I'll stop there, Michaela. Thank you.
Thank you very much, Monica, for the introduction, explaining us what exactly you're doing and how your company is, let's say, helping other companies. Okay, so welcome. And let me introduce, last but not least, Dr. Denis Znamensky. Denis, you can switch on your camera as well, so that we can see you. So Denis has solid and very broad technology background and demonstrated skills in fintech, blockchain, and trading systems development. He holds PhD in applied mathematics from Université Pierre et Marie Curie. He is expert in setting up, managing, and running hedge funds. Denis has also international business experience in UK, France, Israel, and Japan. Denis speaks at international blockchain events, advising international fintech companies like Buybox and IndexChain. So, Denis, welcome. Would you like to add something and tell us more about your company and your projects?
Absolutely, Michaela. Yes. So currently, we are running a project which offers tokenization of real estate. We decided to tackle this very simple project that is understandable for everybody for the first time, probably. Since basically almost everybody considers himself as a specialist in real estate. At least once in his her lifetime, they were like a real estate owner or something. So so it's easy basically to explain it to people, and the objective is making real estate market more liquid, more accessible, and also it offers the protection against inflation, which is very important in the current situation. Basically, real estate appreciates just like any other goods. So de facto, it is a hedge against inflation.
Denis,
Yes.
I think we lost you.
Okay. Do you hear me?
We can hear you now. It's a little
Good.
bit frozen, so you can continue.
Good. So yes, this we have developed a secondary market platform for the secondary market token trading. So this will be a proprietary secondary market platform where all the tokens from various NFT real estates will be listed and traded. Also, step will be the cross-chain tokens.
Yes, Denis?
Yes, that's basically it.
Okay, good. Thank you very much for this introduction. And now I would like to start with our panel discussion. So let's get started. And first of all, I would like to begin by asking Surabhi. Now I will ask all of you, we can switch on the camera that we can see each other and really start the discussion. But Surabhi, I have a question for you. What do you think? What is the real value in the metaverse for financial services?
Okay. So in 1990, when internet was new, people would ask, "What do you do on the internet?" And the answer would be maybe read news, listen to music. But the person who has seen TV or radio would just say, "Oh, but we already do that on radio." So the value of metaverse is a completely new way of interacting, living, earning, spending, saving, building new communities, getting ownership. Like I've literally been telling my friends with great playlists, why don't you just put an NFT out there? You know, after listening to some of your playlists, someone will be interested in buying it because they are great. Something what Mesad was explaining, it is essentially banks should understand that you can encode certain triggers, your rules in banking into smart contracts. How can you build intelligent avatars? Right now, we just have avatars floating around. How can you understand when they would like to change? It is similar to a trader being having savings account as well as a trading account, having a small business, is also planning for retirement. So you see, we are already multidimensional, and NFTs and metaverse allows you to be that multidimensional being that you are.
Thank you very much, Surabi. Maybe Mirsad, I think now is the right time to tell us more, let's say, about your project and let's say the services, the financial services that you are offering for the artists.
Well, so getting back to the NFTs, so the way NFTs are collectible asset, digital assets, let's put it this way for now. And as Surabi was mentioning, they're gonna have value, and they are already have value within the communities. So my question would be, number one, what NFT is teaching us as human beings, in my opinion, is we are discovering how we are functioning in real world. So now it makes sense. People who are in the NFTs and who understand NFTs, now they understand why it makes sense for someone to wear a $10,000 watch or $300,000 watch. Why the watch has a value? The reason for that is because it connects you to certain type of people, which is your network, which means it gives you access to high net worth individuals that you can do business with them or you can get connected with them. NFTs are the same thing, but now thinking about a real estate, let's say real estate is a good example. Let's say there's a real estate in Manhattan which worth $20 million. A normal person cannot afford to buy a $20 million apartment penthouse in Manhattan. So this is going to create unequal opportunities for people because it's very tough to get $20 million loan or money cash to buy a penthouse. So now imagine that unique penthouse ownership become an NFT. So whoever owns this penthouse can own it because he owns the NFT of this. So basically it's a contract which says you own this penthouse and this is a proof of it because you own the NFT. So now how can we make this accessible for more people? And that's where financial system gonna kick into the NFT and the Web3 ecosystem. So you can technologically fractionalize NFT into millions of pieces. So let's say we're gonna have 20 million pieces, which represent each piece represent $1. And whoever wanna own part of this real estate can invest with $1 to own one piece, because each piece are fraction of the NFT, which represent the whole penthouse. Now, let's say I can only afford to buy 5%. You can only afford to buy 1%, and someone else can afford to buy 50%. So what would happen is, with a tokenized system, we can prove that there are multiple people who own part of the ownership of this flat. You can get in with as small as $1 into the investing into such a flat. So what would happen is, if that flat goes on rent over the year, which can produce $400,000, let's say, income per year, then that 400,000 can be distributed through smart contracts, automated to every owner who own a percentage of this flat. And that's how the real estate market can be liquided and financial market can get involved with it. That's one example. In the music industry, what would happen is, so every NFT project which is out there, they're collecting secondary royalty sales. And the secondary royalty sales, it's way more interesting, and it has proven that it generates more income for artists in the first place in comparison to old and broken copyright laws that we have in place, considering copyright laws were established in 1790 initially. So the rules around copyright is pretty broken because they were established based on considering that you cannot copy something to 100% equal quality of the original piece, which is not the case anymore with the enhancement of the technology. So now, once the secondary royalty of the NFTs kick into the play, that means artists can collect automated cash flow based on everyone who's trading this. Then that piece which collect these royalties is going to become an asset. So the artist own an asset because it generates revenue for him based on someone else's action. Now, the way I see things going to move within the music industry is that if you can turn the original contract of any music which is turned into an NFT, which is generating secondary sales, and you fractionalize that and you allow people to own percentage of these on-chain royalty distribution. Just mark my word, I'm talking about on-chain royalty distribution, not traditional copyright royalty collection. So then whoever owns a piece of this NFT can basically earn because this asset is generating value and it has value for a bunch of community, for people who value that. So maybe Michaela, maybe you don't value it, it's fine, but I value it. Maybe Monica doesn't value it, but someone else values it. So it's about the perception. I go one more thing about let me roll back about what we are doing. So we think utility of these NFTs are very important for people to understand them and to do something with the NFTs they own. So it not only be a speculation, but also you can get certain rights. That's why we are building Soundverses, which are the rooms that whoever own a music NFTs, they can showcase their NFTs there, and they can collect tokens based on the amount of people or community they come. Imagine you have cool music collection and people come to listen to your music, and because you have this collection, you can earn token because you have a good taste on music. And you not only help artists to discover that their music getting discovered by many people, but also you're promoting them, so you're part of their economy. So this is the basics of what we're doing in Soundverse, and I'll be happy to let the conversation go and flow between all the people. So I would stop right there.
Yeah. If I may just add a point about real estate that Merced just explained us. This is not too far in the future. There are projects in Philippines that are already tokenizing. You can buy the property, you get some tokens. There are different tiers for these tokens, and you can also get citizenship, residency, tax benefits because you're investing in that. And there are a lot of such projects already happening in APAC. We would probably see it in Middle East because UAE is all pro for metaverse and digital asset economy.
Yeah, amazing, Surabhi. Thank you very much, and Marcel as well. And maybe Denise, because we are talking about real estate today, you should be our, let's say, the expert. You have the project. Maybe you can tell us more about you. What do you think about it? How do you, let's say, observe the situation?
Absolutely, Michaela. I'm more than happy to talk about it as we are actively doing it now. Basically, the major issue here was and the legal aspects of ownership of the property. Now we have recently seen the appearance of a new law in Liechtenstein, the TVTG law, that basically regulates this activity. And now you can legally trade and own tokens and basically these will be this will represent the fractions of of the real estate, and this will be for the probably first time actually legal to do that. And in case of any issues, you can refer to the actual legislation, which offers the necessary protection for investors. So all the token trade, the trading, and all the exchanges now in this respect will be regulated by FMA, which is also important. And we know that Liechtenstein is an established legislation, well respected in Europe. Now, the real estate market, it's probably the biggest market among all the other commodities, and it's globally it's over $300 trillion overall. So I think it has the capacity to expand like almost infinitely, like from our point of view. And given that it has much less volatility, well, basically it's not as volatile as other like cryptocurrencies, because it's asset backed actually. It is a very interesting mean to store value. Basically, not only you store value, you protect from inflation, but also you gain income from renting the real estate, and that's a small income compared to like of cryptocurrencies like or some other coins, but it is stable, and it's asset backed, so you can always check your your real estate. It will not disappear in one day. So it will stay there, and it will keep its value. And we saw that prices on real estate, for example, in England, uh, it kept rising during the COVID period, and now it soars. It skyrockets now, and it will continue skyrocketing along with inflation. So that's why I think that's a very good investment opportunity, and probably for the first time it becomes liquid and transparent.
Thank you very much, Denise. And we have here one more question from Duncan related to Liechtenstein Act. Have you seen much enterprise adoption of the Liechtenstein Act for tokenization? The framework seems quite leading in terms of industry regulatory standards.
It's a very recent development. The law was accepted only in 2020, so we don't have much of use cases. We are working with Nagel. This is the legal company that actually participated in creation of this law, and they are consulting us in this respect. So I think in the very nearest future we will see more and more applications of this law.
Thank you very much, Denise. Maybe before we will move to another question, Monica, would you like to add something? Let's say, What do you think about how can metaverse improve global financial services? How, let's say, your company is improving the global financial services?
We provide global financial services in a way where we provide instant liquidity. We provide instant liquidity for anybody looking to exchange their fiat to crypto or crypto to fiat. So two-way trading. So, for example, we're an OTC desk, so we trade large orders, typically from 250K and above. So, and we serve corporates as well as high net worth individuals. So businesses will come to us and say that they've accumulated a larger amount of cryptocurrencies, for example, and they need to liquidate it. And they need to do it quickly, they need to do it cheaply, and they need to do it in a professional way, in terms of a professional service. And we provide that instant liquidity where we can do the exchange for them quickly, and we can provide the fiat currencies that they want, i.e. euros, GBP, USD, and we can transfer to their bank accounts. So traditional bank accounts that they have anywhere in the world. So providing that service, already they're available to access the exchange, and they exchange for fiat to pay their day-to-day operations, VAT, taxes, salaries, rent, just to do the most basic business operations. They use our trading desk for. And the other way that we're impacting the financial services is a lot of our clients who touch crypto-related activities, i.e. crypto trading, their banks, as soon as they catch wind that it's crypto-related, they will either bombard them with 100 forms, 100 questions to delay the transaction, or they will close the account. If you close any bank account that belongs to any business, you're basically closing down the business because they're not able to pay salaries, they're not able to pay their invoices, they're not available to run their business or make any profit. So they are in a panic. These business owners are already in a panic mode about how they're going to survive. So they would look for redundancy banking. And there are many, many poor businesses out there that operate as payment service providers, and they need someone that is trusted, that is reliable, that can provide just day-to-day basic banking for them. So we launched a payment institution out of the UK last year, and we provide a payments platform with SEPA, SWIFT, IBANs, real named IBANs in their company name, to provide them corporate day-to-day banking services where they can log in 24/7, pay bills, pay salaries, move their money globally. Masad, do you have a question?
Yes, sure, Monica. I can relate to what you just spoke, because it's very sad, but it's what I'm dealing with on day-to-day basis. I'm holding an Iranian passport, and I can not only have a bank account, but also I cannot. They closed all our bank accounts in 2007 because of the sanctions, and the same. So I have experience from personal problem that I was facing with, and now the same is happening with the blockchain companies. The banking system is blocking them, but I'm familiar to the matter because of the personal side, but it's extremely terrible. It forced founders like me to trust blockchain and exchange money on the chain rather than putting our money in a bank, because we cannot have a bank account. That's simple.
And what AIMS is trying to do is we're trying to bridge that. We're trying to be the bridge between these underserved sectors to financial services, i.e. corporate banking, in the future, yield products, loans, custodial services. So, there's a huge underserved market that doesn't have access to this. And that's what we're trying to reach, our outreach. And the next step would be individuals. And if for the panel and the audience today, there is a huge sector that is underserved in this modern day world. 1.7 billion of the global population is underbanked. So how do we make financial services accessible for that 1.7 billion? And these 1.7 billion are not in underdeveloped countries. There are those that are in developed countries that still can't get access to banking. So we are looking to help make that more accessible.
Great work. And I can't wait to see this.
Yeah, it is a big passion of mine to help drive this forward. And yeah, it makes me feel happy, and it's very rewarding when we do make a difference to people's lives, because a lot of our clients spend a lot of their time, like you, Masad, on banking. Why should you spend all your time on the phone talking to the banks when you could be doing your job? You don't get to do your job because you're on the phone trying to sort out your finances, and that's not right.
Look, it's just a lot of time, a lot of headache. Like I'm a core believer that at the end of the day, the entrepreneurs, they're problem solvers, so they find their way to do it with banks or without banks. And it's a proof for my country and my family. We found a way to do it, even it's harder for us. But it's just harder for no reason, just because of some rules that it's in place which make it harder. It's a waste of time, as you said. I can't wait that this problem gets solved, and this is really I'm gonna be a big customer of your services in that.
And a lot of the times, Masad, is not only do you have to find creative solutions to get banking, a lot of the times you have to pay higher fees in order to do so, and a lot of the times you have to have higher risks in order to do so, and that's not right.
Exactly. High risk means, to tell you, just to shed some light here, my friends who are in Dubai or in other countries and they need banking and they cannot open it for various reasons, and they have nothing tied to any illegal activities or anything in that direction. They are forced to put their businesses on a third person name from a third world country, anywhere. I don't want to name some countries here, but they just put those people and they claim they are the business owners, and they put everything is at the risk. Imagine your business, millions of dollars in the hand of a third person. It's a lot of risk involved.
Dennis, you raised your hand. Sorry, Surabi.
Yeah. And Monica, I'm sorry, because maybe before Surabi raised her hand before. Just
hi, Surabi.
Jump, Surabi, you wanted to add something, and then Dennis, for sure.
I completely agree with Monica. There are Masad, there are so many people who are outside of the banking landscape. They're not necessarily in rural areas or in poor countries. In fact, metaverse need not be costly VR sets. They can be on your phone. You have telecom sector that has MasterCard is partnered with Verizon. MasterCard is partnering with Apple is partnering with MetaMask. Tomorrow, maybe your next phones are going to have digital wallets in the phone, and you have protocols like Cello and other things that focus on financial inclusion. So this enables the devices that you have, the things that you use, they will become part of the metaverse and enable much better distribution of financial services. Right now, you have to go to a bank, you have to go to a centralized authority to get things done, whether it's your certificates, whether it's your money, other things that you require need not be in a centralized fashion. They could just be on your phone in a decentralized manner. If you could open an account and exchange money, right? You are not concerned about your account. You're just concerned about the exchange and the interest you earn and your ways of investments. And if that can be provided, let's say on your phone itself, and it gives you an immersive experience, your social identity, your documents are all NFTs. You have some yields earning out of these new business models. Then you don't essentially need to stick to your older ways of working.
Thank you, Surabi. Dennis, did you have a question?
Yeah, absolutely. Just a comment. I totally agree with this banking issue, and we also developed a digital banking solution previously that we are aiming to deploy as well. Uh, so this will be a fiat and crypto digital solution, of course. But not only banking, I think, can be disrupted by the metaverse, but also I think in conjunction with some Caribbean island jurisdictions, a metaverse can become a separate state on its own. And basically, the objective is to get rid of the current states, which basically enforce you to follow their rules, and basically you have to pay their taxes without knowing what you are paying for. While a metaverse can create a separate, I would say, state, where a state becomes a service provider, just like a bank or just like an internet provider, and you just pay. You don't pay taxes anymore. You pay a subscription for certain services, right? And this is a good step towards a stateless society, I think, where like people like get rid of the current states. Of course, it will be difficult for many, but I think it's possible.
Thank you, Dennis.
I think just to add on Dennis, I think metaverse is the opportunity for us to recreate efficient law system around our current world and how things are gonna work efficiently rather than trying to fit everything to what framed we had before. That's the opportunity that I see. And as Dennis said, Caribbeans, UAE, any jurisdiction which is pro tech, they're gonna be a winner here because like, look, tech is a one-way highway. We never go back. It's just one way. If you look at the last 20 years, everything which tech brought to us was adopted, and metaverse is going to be the same. So I see metaverse as an opportunity to recreate the rules, and we can test them to see if it's working in that simulative world, and if so, we can adopt in our real world as well.
Absolutely. I think they're fundamentally different, right? You see, fintechs have been impacting your UI and your processes. That's about it. But when you talk about decentralized autonomous organizations, the way law is changing, it need not be, you could have multiple passports. And they could be, in future, your digital wallet, if you're a traveler, you could have multiple stable coins, multiple fiat currencies, multiple cryptocurrencies, and fiat currencies. I think that's the future we are going towards. And right now, we're just talking about metaverse. You're going to have 5G, you're going to have IoT. The working capital cycles are not going to stay 60 days, 90 days as it is right now, because you have shipping containers moving here and there. But you're going to have companies with IoT portfolios. That data is going to be on blockchain, and they are going to give you better risk measures of the machinery on their books. It's not going to be the traditional rules that were there. So they could completely change. They could monetize all their assets that they have, just lying on their books for weeks, months, until certain processes, until certain legal governance processes go ahead. So it will completely change even for commercial, companies. It could be a solar farm, it could be an airline, it could be any of these manufacturing companies. In fact, some of the manufacturing companies in Germany have programmable warranties, and they look for creating DeFi-like structures within their own organizations, which are spread across multiple countries.
I'm sorry. Yeah, I think we have one more topic that we have to discuss. We have a few minutes left, and this was a question from a bank. The cryptocurrency Luna dropped like 80% for some time ago. Who guarantees the crypto stability like NFT Bitcoins? I think there is already discussion in our public chat, so maybe we can discuss it here with all of you. I think Mirsad and Surabi, you replied to Bent. Maybe you would like to explain it one more time for all of us.
As I respond, the Luna case, there are some experts within the industry that claim that was a pure manipulation, which has happened. But the fact is, everything is possible. Like the money, just because they claim this is a stable coin, it doesn't mean you can put all your savings. Unfortunately, one of my team members from Germany, he lost 280,000 euro on Luna last week, and that's a real pain. And I get that when people are worried about this, but the question, and to be frank, the Luna had over $20 billion in capital in the market cap, and people trust when they see 20 billion. Same with the Lehman Brothers. People trust Lehman Brothers. It was a 140 years old company. So who would think Lehman Brothers would go bankrupt? So the thing is, it's up to the people. I think people are wise enough to understand, and they should be, if they're investing, where to put their money and how they're doing with this. But there is no guarantee, in my opinion. At the end of the day, even euro is now losing value. Like we're seeing it every day. The inflation is getting higher. The buying power of the people are getting less and less and less. So where is the guarantee that euro is holding its value? Dollar the same. So I would say the reality is government trying to do their best to keep the value constant and stable also for euro. But if they can, I'm not sure, because it was in the last months we saw that the policies were not working as it was supposed to do. If you look at the flights, Vienna, Berlin, I was looking to fly to Berlin today actually, but I couldn't because of this call. The flight from Vienna to Berlin is 570 euro. Isn't it ridiculous? We're flying with 87 euro. 87 euro. I got on the flight with 80, maximum 200 euro, 570 euro. I have internal access to different businesses within the ecosystem. So the euro value is also losing. Just because you don't feel it now, it doesn't mean they're stable. That's my point.
Thank you very much, Denis.
Yes, I think I totally agree with Mirsad, and I think it will get even worse than that because the inflation is higher than the projected interest rate raise in Europe and in the United States. Basically, with 7% of inflation in Europe, and I don't know what's the objective, maybe 3% of rise of the interest rates. It will not be enough, right? So this is a clear recession signal that is coming with spiraling inflation and possible. Well, maybe this is the time when this is the end of Europe as we see it now.
Thank you very much, Denis. Maybe Surabhi, I know that you mentioned something as well in the chat. So maybe I'll take the bank point of view.
So this is an interesting point of how currencies are managed by governments. We do not see the flaws that they are, making in their decisions or minting more money or, so there you have CBDCs, central digital bank currencies, where you could have more control, granular control in monetary policy, in economics that governments can do. How can they protect themselves from a reserve currency, which is USD? You can see that it is dominant even in the stable coins right now. The crash for Terra, Luna, it is same. I would like to recall Wells Fargo giving advice over cryptocurrency. It is same as how you invest in stocks. It is same as how you invest in mutual funds. You have to know what you're investing in, right? The project, does it make sense? What are analysts talking about? What are people talking here? There are no official analysts who want to talk, but there are people who want to call out bad projects. Like a few months ago, someone was talking about Terra, and there are going to be these marketing. Your algorithms, your search algorithms in Google are going to give you what you search for. Like if you search if Terra is good, it is going to give you results like that. But you always need to look at both the sides of the coin, whether you're investing in traditional financial products or these new projects. It's the same. Have you done your due diligence, or have you just followed someone's market tip? I think the same applies when you're investing in stable coins. And algorithmic stable coins are probably not the best ways of designing a stable coin. You need to have certain backing. Now you right now as we speak, MakerDAO is at the top of DeFi projects. They have a coin which is called DAI, and it is over collateralized, which is exactly against the risk of when there's volatility, the liquidity changes. So how is a project designed? How is it going to sustain? I think these are the questions you would ask even while buying shares. So the questions remain the same, but your nature of assets and asset classes are going to change and evolve continually.
Thank you very much, Surabhi. And I'm just afraid that we run out of time. So now we cannot answer the remaining question, but don't worry. We will organize in 1 week, next Wednesday, a follow-up networking group where we will invite all of our speakers. You will be able to switch on your cameras and discuss directly. I can see my colleague Jörg is already here. So now, please, I would like to ask all of the panelists to briefly make a statement or final recommendations to close to close the discussion. So 30 seconds, please. I can see the first one on the screen, Denis.
Yes, to summarize, basically, I do think that some sort of asset-backed stable coins are always real value to hold in your e-wallets.
Thank you very much. Thank you very much, Denis. Mirsad, would you like to continue?
Sure. I would leave the audience with one thing about NFTs who are skeptical about it. NFTs are like a comet which is hitting the earth in a slow motion. That's all I left for you to think about and get adopted to the NFTs, because the impact in our life in the future going to be massive by NFTs. Just be curious and try to learn and study it.
Thank you very much, Mirsad. Monica?
Hi, everyone. I would leave on the final comments, echoing Surabhi, which is always do your own research. Remember that the crypto market is all speculative. No one has shown any evidence that these stable coins are backed one-to-one with fiat currencies. So it's all speculative, and do your own research. And like Messard touched on, keep an open mind, keep learning, join communities like this to learn more, ask questions, and reach out to the panelists for any advice. And yeah, I'm really looking forward to how the metaverse and the virtual world is evolving, and we all have a part to play in the development of this world, this virtual world, and we all have a social responsibility to make sure that in real life, our life is not perfect. So how do we make it right in the virtual world? Thank you.
Thank you very much, Monica and Surabhi.
Yeah. So a lot of people who try metaverse projects or POCs kind of ask questions like, is this for entertainment? Is this sustainable? I would like to leave an analogy. Earlier we had horse carriages and we thought of cars could have accidents. You could die either in the car or some car running over you. Now it's the other way around. We use cars and horse carriages are for entertainment. I think our existing ways of working are going to land in the museum sometime, and this is going to be a future ahead, and how we build and construct it is going to bring value to all of us. Thank you.
Thank you very much, Surabhi. And I would like to double check if my colleague Jörg is already here. Jörg? Okay, in this case, I would like to thank you all for participating in today's amazing panel, and I'm really looking forward that we will continue our discussion next week. And before we go, we have a small present for you, all of you, because as we already mentioned, we have a different impact project. One of our impact projects are growing trees in Africa. So let me share my screen. Second. So please let me know if you can see my screen. Screen now. So, and we have planted in Africa a name of 1 tree, Denise. 1 tree for Surabhi. 1 tree for Monica and for I will send you the 3 certificates for our webinar. So again, thank you very much for participating. It was really great pleasure having you today here. And thank you very much to the audience as well to participating in today's webinar for the really interesting discussion in the public chat. I already shared the registration link for next week. So if you're interested to continue the discussion, please just register under the link. And I hope to see you soon. And as we always say, technology obliges. Have a wonderful day and goodbye. Thank you. Bye-bye.
Thank you.
Thank you, guys.
Thank you.
Bye-bye.
Bye.
Bye.